Good morning, everyone. Welcome to Admiral Markets webinar. Today's focus is going to be on strategy in the Forex market, and we can take a look at other instruments as well. Before we do that, though, these disclaimers. This webinar is shown to a global audience, but may not be suitable for everyone. Take a look at this link, select your country of residence, and contact an appropriate entity to find out more about that and other details. Also be aware that trading foreign exchange and global financial markets is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer, plus you're aware of the risk involved when trading. Alrighty, so we're going to focus on trade management, I think, today. But we can take a look at other aspects if you like. If you have any questions, feel free to use that chat box that is available. Before we dive into the charts, I do want to take a look at the calendar. You can find all of that by going to analytics on the website. And you'll find a bunch of information like the market heat map, for instance, which shows the big movers, the big currency pairs and stocks. And you'll find a lot of information here, actually, including trading platforms. That includes Supreme Edition, which has about 60 and more extra features compared to the standard MT4, but also including the web trader, which has recently been released, which allows you to trade from your browser. So take a look at that. That could be something for you. Regarding the calendar, let's take a look right now. We have data from China coming up and or released already. Interesting to see how that's going to be impacting the market. We'll take a look very soon. President Obama gave his last speech as a president because later this year there will be elections. Probably you've already seen a lot of media coverage about that. We got an ECB non-monetary policy meeting coming up today, but I think tomorrow is a big news event as well on the pound, right? We got the interest rate and Bank of England voting count and that kind of announcement. So that could be a big day for the pound, obviously. Looking at the market heat map here, what do we got going on? Volatility going down, as you can see, a bit. There's one exception, pound odd, a couple of pound pairs, still showing a lot of volatility. In fact, that's not so strange. Pound typically does that. Look, pound soaring here, showing a lot of volatility. Number one yesterday, second was Aussie, third was Euro, together with the New Zealand dollar. One of the slower movers. Interesting. All right. Anything standing out? Well, pound weakness, pound moving down, as you can see. Let's see if we can see some more pound weakness today. And that was partly driven, obviously, by the news event. So one of my trades yesterday, pound CAD, did not fare well, ended up in a loss, unfortunately. But luckily did get compensated by some other trades I took yesterday. One after the webinar was the pound yen short, which gave me some pips, luckily. All right, let's take a look. I will take a look at the market right now, live, to see what's going on. But then after that, I want to dive into a bit of a trade management, I thought. Something that we don't discuss often, something different. So if you have any questions in general or specifically on trade management, let me know. All right, let's take a look. ATR, I was just looking at, the decrease, obviously, of the average range here on the euro dollar. We're getting more consolidation on the euro dollar, specifically the last, since this big candle, right? 27 days already. And I was just curious how that range reflected in the bigger picture. And we do see a bit of a decrease here, right, on the range, logically, if we're in such a big choppy zone. All right. So yesterday, doji, almost perfect doji, it seems, with a high and a low that are right at each other's same level. Let's see. The close, sorry, not the high and low, the close and open, excuse me. Half a pip difference here only. We had some upside first, got rejected, and then moved back up. So it's kind of like a zigzag day like this. Boom, halfway. doji. So from that point of view, we're still looking at a weekly candle that's bullish, so this could just be a retracement. But obviously, last weeks have gone sideways, so it's definitely a ranging environment. And we can see that on a 4-hour chart pretty clearly, I think, with a resistance and support trend lines that are very neat and giving an accurate indication of where the breakouts could occur and where the bounces could occur. At this moment, when looking at the hourly chart, I had this fib on yesterday and was saying a 61.8 fib could be a bouncing spot, and it did bounce, but it didn't continue. I was expecting continuation, but it didn't happen. And it's good that we didn't get really any confirmation signals here. There was a one bullish candle, which if taken would have been a small kind of loss because obviously the risk was very small. Risk would have been either below this bottom or it's still below this bottom. And in that case, the trade is still open. But I was looking for a hook back yesterday, right? Up, hook back for upside. Considering the fact that this bullish candle was still an inside candle compared to the previous candle, I don't think that was a signal that was strong enough, from my point of view at least. This one too, price went down, respected the 78.6 fib, the 88.6 fib here, but still struggling kind of against this downtrend. So we have two things I think in play. We got this trend line here and this bottom. In that case, the fib will break. We got to break out down to the bigger 4-hour trend line. Hang on. All right. And then we have this trend line as well. And if that breaks, then we have a move up to the resistance. That's my view at this moment. Pretty tight wedge at the moment. It's a wedge within the wedge. The smaller wedge is tight. You can see there's not a lot of space between those trend lines. Only about 30, 40 pips. It's probably going to break. Question is which way. My bias is to the upside because this bottom has not broken yet. But let's see. Obviously, I'll wait for the market to make that decision. And time will tell. From a wave perspective, this to me seems like a wave A. This could be a wave B. And then if we break, this could be for the wave C. If we break to the downside, well, then either it's a expansion of the wave B still, and this is the wave A, instead of this being, let's see, what did I say just a second ago? Yeah, I said A, B, right, C? No, I have actually A, B, and I have this as 1 and 2 of C. But if it breaks to the downside, then I'll make it different. Then I'll probably move the B down here. Anyhow, still a bouncing spot. Basically, the point is that there's still a bouncing spot right here at the blue circle. Otherwise, I really don't have much to say on this euro dollar. Any questions on the euro dollar at this moment? 5-minute, 50-minute charts. Just a typical kind of consolidation. In fact, I mean, there's multiple ways of looking at it. Is it inverse head and shoulders, or is it a bear flag? We got a momentum here. This could be a bear flag and break. Could be both, in fact. Very simple. And just waiting for price to break out of this morning consolidation. All right, if you have questions, let me know. Pound USD, interesting, of course, how it accelerated, and you can see deep retracements at the beginning, 78.6 fib pullback, 50% pullback, bouncing off the minus 272 target at first, then the minus 61.8 target. Then if we use this fib, you can see price bounce off a 38.2 fib, right? So if we use these two fibs, because price was respecting these two targets, kind of went through this one, right? Doesn't respect all of them. Then the next zone where I see a lot of fib targets is actually around 143, 143.40. There's a minus 161.8 fib. There's a minus 61.8 fib. Price made that dash yesterday, arrived at that zone, and has in the meantime, from its peak here, since accelerated, fallen about 900 pips. And as you can see, a very momentum, big momentum here, bearish impulse to the downside. A lot of daily candles pushing, pushing, pushing lower, lower, lower. At first, as we were saying, the trend was shallow angle. Let me show you. Right, that's shallow. There was not a lot of angle to that. But once we broke, it really started to fall quickly. Broke through this bottom without any problem. Now, perhaps at some targets, significant targets, could be. In my opinion, there's a decent chance. Will it not perhaps make still a small fall? We have a low here around 143.50. Could it go down to 143.20? Sure. Not saying it's necessarily over the downtrend, but we could be in a bigger, wider zone that perhaps could cause a bounce. That's all I'm trying to say. So on this time frame here, we've got a very steep channel on the pound USD. Very steep channel. Price made a bit of a retracement yesterday. As you can see, if we take the last leg here, we can put the fib on like this. Went up about halfway, 50% bounce, and is now moving lower. And that could be just a rebound for that one more push, right? Down to the minus 272 target perhaps, or this minus 61.8 target. Make one more fall like this, and then there'll be divergence between the bottoms, and then maybe we'll get a bigger correction. Now, from a wave perspective, I already have placed it as a potential A, B for a C. Will that happen? That particular wave count is about a 50-50. It could also easily break the bottom and go to targets. But it is at a point, as I said, when you look at those fib targets, that it could do something like this. So if a trader wants to find higher probability setups, then a short right now, I think, is not the best. It's okay-ish, but it's not a high probability setup. I think just because we're getting into a zone where there are big targets, and then in that case, we could get a bullish bounce against the trend. So from that point of view, I don't think that particular chance is very high. And if you're looking for setups that are not 50-50-ish, that definitely doesn't qualify in my opinion. 50-minute chart, you can see a bit of a turnaround already. 5-minute chart, pretty early fall for the pound USD, making lower lows here at the moment. And while there's still plenty of space to go down, even if it were to bounce off a deep fib, typically, because the trend is strong to the downside, it would go down to strong fibs, lower fibs, excuse me, like the 61 or the 78. So I'm not saying an intraday short might not make sense. If it pulls back up to this resistance and still turns around, breaks a 5-minute fractal, for instance, here, then there's enough space on a 5-minute chart at least to these fibs to make it still probably worthwhile. I don't see any swing trades here to the downside just because the space is a bit on the smaller side. Let me change this fib here. All right. So I think that's it from a pound USD perspective. If it makes an ABC zigzag, go up to 145 target, minus 272 and a 61.8 target, and it could bounce maybe off a 78.6 fib and do that, perhaps. But that's also, of course, a reversal trade. Might not happen. Might just continue 50-50-ish setup. So it depends. If you catch it if there's some price action signal that allows us to use a tighter stop loss here below the candle low, then the reward to risk might compensate that risk of, that lower probability of the trade, of the reversal trade materializing. All right. Dollar yen basically, well, getting a break here, and it's starting to look like an ABC zigzag. It's starting to look like this was momentum to the upside. This was correction. And this is, again, a momentum to the upside, right? So what we're getting is momentum, correction, momentum. Yes, the trend is down. But when we see momentum on a lower time frame, like this, 5 waves, you don't need to know much about any waves, but if you wave theory at all, but if you see 5, there could be an alarm bell going off, and it's not that difficult to see it, right? In this case, if it's simple to see, why not use it? So first signal that a trend reversal might happen. On top of that, we get a break of a pretty steep but good trend line that shows the downtrend very neatly. So when price breaks through that after this impulse and 1 hour A and then a correction and then breaks that resistance trend line, another confirmation that we might get some upside. So let me get rid of this fib. It's confusing. Okay, so if we put a fib on the entire downside, I do that because to me it seems like a correction, a bearish correction has completed. And why? Well, first of all, there are on this 4-hour chart, I would say, well, how do I phrase it? First of all, there's a daily support level, right, close by. That's point 1. Point 2, that the correction to the downside has, I would say, the potential of finishing 5 waves. It has divergence between these bottoms. Another reason. So daily support and that seems already like good reasons. Plus, I talked about this formation as well, right? So three things I think that show that. From a daily perspective, we see a very big correction like this, and we've fallen pretty far like this. So a bit of a bounce at support before we probably will continue lower in this bigger correction. It doesn't seem that unlikely. So from that point of view, price is stopping at the 23.6 fib, but I would expect it to go up to the 38.2 fib at least, if not the 50. And I would expect a pullback at one of these fibs. It's already bouncing off the 38.2 fib to go up to higher levels here. So let's zoom into the 15 and 5 perhaps. Now from an intraday perspective, I think trading any breakouts here is still too risky because yes, the 4-hour might have had a breakout here, but from a moving average perspective, we are still in a downtrend, and I think 50-minute chart is a bit too risky from that point of view because it's too much of a mix. 1 hour is up, 4 hours at best a mix, maybe still slightly down because of the moving averages, right? We got the trend line break, but the trend line, don't forget, is very steep line. So we'd still be cautious. We're still below a main resistance level like this as well. So I think that when I personally trade breakouts in the 15, I like to have both the hourly and the 4-hour aligned. Don't think the 4-hour is aligned yet. The 1 hour is. So I personally would not look for breakouts, but what would be interesting if it does make a pullback here to a deeper fib for a bounce, I think. All right, on a 5-minute chart, as I said, I wouldn't trade breakouts, but if it does manage to push above these tops and then make a hook back to about that same level like this, then there could be a 5-minute bounce up to that target. That's not something I would exclude necessarily from that point of view. Maybe for about 40 pips there. It's something I'll keep an eye on. I'm not sure. It doesn't look that great, but could be. So pullback or break pullback, I think at the moment for the dollar yen as a slightly counter trend upside here at the moment. All right, pound yen. Pound yen is the one trade I took yesterday after the trading room, and oh, hang on, folks. Seems like to reboot it here. 1 second. It was a short on a 5-minute chart. I'll show it to you, and then we can continue analyzing this this pair. All right, there we go. And let me quickly get my grasp for where it was. It was short below this fractals. You got everything aligned. 4-hour, 1-hour downtrend. You got a 5-minute impulse pullback, and I was trading the continuation break basically. This break right in here, and I think at least let me double think about this. Let me quickly check. Maybe it was a bit later. 1 second. 16:15. No, that was the spot indeed. But then where did I get out? Let's see. I think I remember. I got out here on this rebound. All right. So quickly, I don't want to dive in too long here, but basically took the break of this trend line and this fractal. Everything was aligned. Managed to live through this pullback because to me that was probably just going to be a lower high. That was very likely. So I left the trail as it was, went for a pullback, then continued, and that's when I put it at break even because this candle was a pretty strong candle as well. We'll talk about that in trade management too, and put it at break even, and then got a bit of a 5-minute bounce here with 5-minute bullish candles. That's why I started to take it out. I still thought one more low was likely, but still decided to take it off, and I'll tell you why. Because on a higher time frame, when you put a line here, you'll see why I was a bit skeptical of that level. No, which time frame was it? 4 hour. You see there was a bottom right in here. I was skeptical that price could go really a lot below it. I was obviously seeing that as a potential support level. It was a support level that could potentially bounce, and on a 5-minute chart that that could be easily a reason to see it turn. And that's why I took it off. I saw a bullish candle at that orange line or green line or whatever, and at the time it was green probably, and I took that trade. So it was plus 30 pips, right? So still went lower, but then really not much before it did indeed bounce, right? So that was the idea. Anyhow, let's go to now. Still a major downtrend, but what do we got? Double bottom? Yes, we do. At least potentially. Obviously, it's very strong. This is a bit of a difficult one. We got such a massive downtrend on the daily. You got a massive weekly candles. They just fill that space between the moving averages. Look at that. 21 EMA, 144. First attempt, right? Second attempt, boom, bang. Straight line to the downside, right? Amazing. Beautiful. It's, from my point of view, a work of art to see how that really moves so beautifully between those spaces. And that happens when it doesn't do that, when it doesn't fill that space, right? You often get two, well, not always, but you definitely regularly get two breaks below that 21 EMA. Let's take a look at some examples here. 1, 2, 1, 2, 1, 2. Let's take a look at those differences here. We got 1, 2, 1, 2 at the first left, right? What do we see there? Price basically not able to, well, it posts some candle closes below it, but eventually we got a bullish candle. We get the break and continuation, right? So we got here two. We got 1, 2, 1, 2, and you can see that second one breakout continuation is the best. We never got it here, right? We didn't even get a 1, but let's say we would consider this 1. It just peaked above it, okay? For argument, just for the fun of it, that's it. That's 1. We never got a 2, so breakout to the upside wasn't there on a weekly, right? And this is not only weekly, by the way. This principle can be used on, in my opinion, all time frames. The 1, 2. So this time it was going to reverse, and we got one clue was just a massive candle here that it was going to break. But probably the second clue was the second bearish candle right there. We didn't get that in these cases. And we made that space and fell below that bottom. And that was a good few hundred pips, as you can see. Now we are at the long-term moving averages, which is a bouncing spot. Because if you look at the fib, what happened is basically probably an impulsive correction, or it could be start of a new downtrend. I don't know. But point is that we did make it down to the minus 61.8 target after bouncing off the 50 fib here. Always a potential bounce spot. Plus we got support levels down in here, and we got those long-term moving averages. So somewhere around here, it could get into a bit of a retracement. Now, if you look at the daily chart, you can see that massive momentum. It's difficult to imagine maybe that it could bounce, but I'm not saying it has to be right here, but we're getting into a zone where a retracement could happen. And we don't have any divergence, so that is an argument that would say, okay, we could probably still break that bottom once before to get that divergence and then make a bigger retracement, perhaps up to the long-term moving average. So what could happen is that price makes a bit of a dash here to the upside, but then still makes a corrective downside, and then with divergence makes a bigger upside to the long-term moving average. Something like this, I think, might not be that strange to see occur. We got double bottom. We're back in the band, so we're back at resistance as well when we're using trend lines like that. A bit of a squeeze here. This could be a descending wedge as well, especially if it moves down and then up again. It doesn't break, but instead moves down again. I should do it the other way around, sorry. Like that. So all in all, what kind of trades could there be possible when looking at this environment? Well, I would probably, let me see. I think it depends what type of trader you are too. I think that with the trend setups, there could definitely still be something interesting up in here perhaps, or if it makes a hook back here even like this, for downside. For reversal trades, I would probably still wait for one more break of this bottom before hunting for that. Yeah, so that's probably what I'm thinking about. So we got 1, 2, 3, 4, 5. This is the sixth candle, now breaking this top. So if it makes a bit of a smaller pullback here, it could be a weakness to make one more fall. And it doesn't have to break this bottom right away. It could bounce first. So from that point of view, let me take a look at the 15-minute chart. Got good impulse to the upside here, but that doesn't necessarily mean everything. And this is the 5-minute chart. Let's see. All right, I would like to see it make a bit deeper pullback first. I would like to see it hit the 50 fib, especially, yeah, in this case, I think it's good because we do have an upside impulse. So I think a deeper pullback makes sense than the 38.2 fib here. I'd like to see it hit the 50, turn around, and at this moment, break through this bottom. Let me make this fib only on a 5-minute chart. We don't need it anywhere else. Alrighty. So break up that bottom on I would probably trade it just on a 5-minute chart, this one. Because why? Because I think that there could be a bounce pretty soon at one of these targets. So if I trade it below this 5-minute fractal, and the price does hit the 50 fib, then I'm looking at about 50 pip risk right in here. And I would probably target the minus 1,000. Let me take a look where the pivot points are. Hang on. Minus 1,000, yes. But there is an M2 at the minus 61.8. So I think that, let's see, that being aware that I would try to find a balance. Maybe take a bit of profit minus 61.8. I still have to think about it. Or, yeah, maybe half target. Or try to hang in for 1,000, see if it breaks through the minus 61.8. But if there are signs of a bounce, either trail stop it tightly, at least to break even at minimum, or if not, locking in profit. That's something we can talk about the trade management part still in more detail. But so either split TPs at these two targets, or at a very minimum, see if once it gets to the minus 61.8, move it to break even, use fractals to lock in profit. And if there's a bullish candle at the minus 61.8 target, either taking the profit right away, or even trailing it tighter. I know there's a lot of options there, so that might be too much to combine depending on your experience, but that's basically how I try to be flexible when price reaches targets. All right, so I know there's a lot of things that have to happen, but it is moving up. So the first step that it has to hit this 50 fib, it's probably going to happen. Let's see. Euro yen. Let's see. At this pound yen bottom as well. Well, it was actually 4-hour bottom on the pound yen dollar. Euro yen has a daily downtrend, but it could be at a bouncing spot, let's face it. And I don't know. I don't see anything that I really am enthusiastic about to discuss. I can analyze it, of course, if you wanted to, but I don't have any strong opinions at the moment on this one, really. Could be a good trend line. Oh. Let's see. This resistance already broken, but yeah, that could be maybe a bit of upside, but I really don't know. I would probably, yeah, I would probably just stay on the sidelines with the euro yen. I think that a euro yen 4-hour obviously down, hourly is a bit of a mix, so it doesn't seem that great. Euro dollar showing some downside at the moment as well, so opposite of the euro yen at the moment. Dollar yen is pushing up. I don't know. Let's take a look at something else. AUD. Well, basically all these pairs have a bit of a mixture at the moment. You see a lot of these pairs were in good trends, strong trends on the 4-hour chart and hourly, but have made pretty significant retracements on the hourly, like the Aussie. Let's take a look at the Aussie. You'll see what I mean. 4-hour, bearish impulse, strong downside. I see some questions, by the way. I'll get to them after this comment. Aussie, strong impulse, right? Price is really moving down. Strong trend. Obviously, if it's on the 4-hour, it's on the hourly too. But what happened on the hourly? It's not trending anymore, right? 4-hour is still strong down, but the hourly lost that momentum. It lost it after a break of this trend line, perhaps, but maybe more importantly, price even breaking out this trend line actually, right? Making a higher low here, making kind of a consolidation, going back up to the long-term moving average. This is not a downtrend anymore in the hourly. This is building some channel at the moment that's going sideways. So we're in a kind of a mixed zone here. 4-hour is down, but the hourly is doesn't have that. And the 4-hour you see is making a retracement as well here. So that makes it, in generally speaking, kind of more of a difficult environment for breakouts at least. There could be still some good bounce trades though. right? I think it's still possible, like maybe a good support or resistance level somewhere that makes sense to position oneself in for turnaround if 4 hours is still down, right? So let's say price manages to break out here, push up, and there's a pivot point, and there's maybe some other resistances we can find, like a fib. Then hunting for a short there, even though the hourly is a bit of a mixture, could make sense because that could be the ultimate retracement maybe for that 4 hour trend to continue, and this was just a bigger 1 hour retracement. So that could still make sense. But breakout trades, when an hourly and 4 hour I think are contradictory of each other, definitely becomes riskier. It's not impossible, but I like to focus on the ones that are just aligned because it's easier. So what type of level could that be? Well, if you look at the pivot points, I'm usually looking at pivot points on the other screen that I have, and we got one R1 at 70.70, for instance, right? If we use a fib on this, and that's valid to use a fib on this entire swing high, swing low, we got 70.79, 38.2 fib. Price already stopped at the 23.6 fib. Next fib, 38.2. How about if we put a fib on the correction, like this? 88.6 fib bounce, minus 272 target at 70.64. So we could see some confluence there, right? 70.64, 70.79. So would I trade this break of this trend line to the upside? No. But I think that waiting for price to get up here, see if there's any 1 hour signals, confirmation of price stopping at this fib could be interesting. Or the 50, right? I'm not putting pending orders at these fibs because I don't want to put the stop loss all the way above the top here, which is where the fib should be because the hourly is an uptrend and we don't know, or maybe uptrend is too strong of a word actually, but hourly is a mix. We don't know how far this can push. The momentum could go further than we think. And I'm not going to use a tight stop loss, take a 38-point fib and put it right above it. Not on this time frame at least. All right, let me take a look at the questions here. Yes, indeed. Anyone that was still a comment from the pound yen, if you remember, indeed. Anyone who traded that really was a bundle down, big downside indeed. How to use that 3-line indicator? This is actually a EMA put on the chart 3 times. If you're interested in that, I can send it to you, but I would like to ask you to send me an email. And you can send that email to this address. And I'll send you the indicator. There it is. That's my email. And the indicator does that. Basically, the angle of the trend, the angle of the moving averages, when it changes, will automatically show a different color. So I have it at the moment installed that when there's a bullish trend, we'll see green. If there's a different shades of green, with the downtrend, I'll see orange for the 21 EMA and purple for the 144. And I like that a lot. I'm guessing that you like it too, and I can send it to you, no problem. I like it a lot because it makes my life a bit easier. I just find it very visually appealing to see the angle in one shot like this. Alrighty. So I'll take this away now. So if you're watching the recording by any chance, then you can pause it and you can copy that. All right, and this Aussie bounce, by the way, coming right at the bottom, could bounce up to the 38 or 50 fib. I don't see that as an impossibility, right? Price would be hooking back to the broken trend line. 50 fib looks especially sweet now when you look at the confluence of that trend line. And the 50 fib is equal to the R2 roughly of the daily pivot point today. It could be a bouncing spot maybe to the downside. All right, Kiwi seems to be doing the same thing here. Sorry. Oh, let's get through that. Basically showing a bit of a bounce potential as well. Could be the same story and same analysis done. Price can go up to one of these two fibs probably, right? Could be the same story. All right, dollar CAD fully in an uptrend, but is moving down on lower time frames. Therefore, obviously not ready for a breakout, but if it would have rebounded, for instance, here, if it would have bounced at this level, at this trend line, for instance, like this, or even like this maybe, and then would have broken through this resistance, I would have considered a long. Not in the Asian session though, obviously, because it is an uptrend, right? Let's get rid of this fib. It's an uptrend, and on the hourly, on the 4-hour, and if it would have then broken through this fractal on the lower time frames, that could have been a breakout. It didn't happen, so it didn't take that breakout, but it's reversing and it's retracing deeper. And this is something that is occurring across the board here. Actually, Euro odd was, oh, this is pound odd, but anyhow, still, pound odd was moving up on the hourly 4-hour. Now, what is it doing? It's 1 hour is already downtrend. 4-hour is still a mix. Euro odd uptrend, 1 hour mix. And the Euro odd actually breaking here the second time, but not getting a follow through. Right. So there are not going to be a lot of with the trend setups, in my opinion, today. Does anyone have a preference with regard to Euro New Zealand, Pound New Zealand? Actually, we can see Euro New Zealand, Pound New Zealand here breaking this trend line, breaking back into the downtrend. We're looking, breaking below these moving averages on a 4-hour. But the hourly is still a mix. So one of these two time frames is always a mix at this moment. I'm looking at these pairs at least. What does that mean? That means that I don't consider it ideal breakout situations. I like the breakouts to be aligned like that. And if they're aligned, then can make good pips. I showed some breakout trades last week, and they were all aligned, and they went very nice. And I'm not saying that it's impossible not to find breakout trades here, but with mixtures like this of trends on time frames, I think that we got to be a bit more cautious at first, but also probably have to look more for bounce trades. For instance, the Euro odd is on a 4-hour chart. Let's see. A bit of a mixture here. Price is below the 21, but 21 is above the 61.8. One breakout trade could be between below the minus 272 down to the long term at minus 61.8, this zone right in here. Other idea could be maybe the bounce off the minus 61.8. Back up. Now we're at the long-term moving average of the hourly. So if it doesn't break this bottom, it could also be a bouncing spot. Well, price would have to first of all break this, but I wouldn't trade the break myself. But that's the first thing. If it does bounce, it would need to break, but I wouldn't take the break. I would like to see it break, see it hook back to those same moving averages. What will happen is these moving averages will turn bullish. Those moving averages have to respond as a bounce spot, right? And then I'll take the next break. That's where I'm trading it to the upside. That's what has to happen. To the downside, it could be this break here below the minus 272 target. It is at the moment, in hourly, it's certainly a downtrend. So it's with the trend breakout. Well, okay, the moving averages are not aligned, but we can see definitely lower lows, lower highs, and we can see that if it breaks this bottom, that it will pull the moving averages, with it, the short term here. So it's not a perfect example, but it's probably going to be okayish, right? So the breakout to the downside is a possibility. Now the 4-hour is not with the trend either, but there is space between those moving averages. So it's not a perfect example of breakout, but it's one of those breakouts that, considering that there's no trend on these time frames, could be one of those breakouts that still might be worth it, despite the fact that there's no trend to the downside here. Break to the upside, I'm not taking unless there's a clear bounce and continuation. So, tougher environment, I would say, than last week. Tougher environment than beginning of this week, even on Mondays, because there's just more mixture of trends. And going to take a bit more time to spot a good trade, probably. So, be a bit more cautious. I think Euro could be a good one to keep an eye on. Pound odd. Let's take a look. I mean, I can take a look at all these pairs, and it's going to take a bit more, I think, work to dive into all of them. So maybe I can talk a bit about trade management at the moment. Otherwise, we don't have that much time left for that. And if you want to take a look at a pair, specific currency pair, just let me know. Regarding the 3-line indicator here, I call it the band, by the way, the EMA band, 21 EMA band. And if we have a recording, I think we do. It's just that I'm not. I think I can find it for you, or you can always go to Admiral Markets YouTube channel and type in moving averages, and I'm sure there will be some webinars there. All right. So let me get you that link of the Admiral Markets YouTube channel. 1 second. All right, trade management. Now, first off, I want to make it very clear that whatever I say about trade management might not be the best for you at all. And it might be good, might not be good. It really depends how you trade, what system you have, your personality, what are your strengths and weaknesses. I think really there's no golden rule for trade management. I think it really depends on a lot of factors. Just got to find the right balance for yourself. And all I can do is share my experiences, and perhaps it could inspire you or help you on one of those fronts. And that's maybe a plus then for the future. Maybe it won't help at all. I think trade management is even more personal maybe than entry, I would say, and analysis almost maybe. But my philosophy in general, and I think that is something we can all agree upon, or almost all of us, I think, is that we should try to keep at least losses small and try to get some of those wins to be bigger, or at least decent size, so we get a good reward to risk. And often enough, of course, entries, I'm not saying that they're important, but if we can exit, let's say our entries moderate, right, but our exits are fantastic, it's probably going to be better than fantastic entries and horrible or moderate entries, in fact. Meaning that exits could be more important than entries, or more important at least than we think. So what do I do? Well, basically, to give you an idea about more general rule of thumb first before I dive into specifics is that what I try to do at the beginning when the trade is just open is I try to give it some space. So I'm a bit more patient at the beginning of a trade. And I try to let it get some, you know, breathing room. It needs time to develop a bit. Sometimes it goes our way right away. Sometimes it doesn't. And I just can't be too nervous about a trade that just is open because otherwise we will never, get to our take profit at all. I mean, obviously, if we close it within 5 minutes, even on a 1 minute chart, right? Obviously, then it's not going to work out. So we got to be patient at that beginning, even if it goes against us. We got a stop loss, and we just have to live with that. That if it reverts right then, it goes against us immediately or soon, got to be willing to take that full loss. I mean, otherwise, if we see it go 10 pips against us, then we're always going to, okay, we might have a small close for a small loss, but how about if that was a retracement? We're never going to have the stamina to live through that trade. So when making a small loss, I don't mean like exiting right away the minute it goes against us. That's not what I mean. But I do have a kind of natural time limit that I do get a bit more naturally impatient, which I say naturally, I mean I want it to become a bit, I'm a bit more demanding on the trade, right? So I tighten my trail, and that is both in time and in real trail stop. And 5 to 6 candles, if it doesn't go my way, is already a bit of a warning sign to me. It has to go within 5 to 6 candles my way. If it doesn't, it's taking too long. I might either close it for market exit, uh, tighten trail, or those are the two things probably, right? Those are the two things, yeah. Market exit or tighten trail. If it doesn't go my way fast enough in time or in price. If it does go my way, I also tighten. But then obviously I'm moving basically the trade to a small loss, minus a few pips, or break even. So I tighten either if it goes my way or it doesn't. There's just 5 to 6 candles. I wait, and if it goes my way, great. I'm at break even or roughly or small loss, perfect. And if it doesn't go my way, I exit or tighten for about probably half the loss or something like that. Then if it is going my way, and I have it about minus 5, few pips, break even, then I again give more space. Because then the trade is risk-free. And I gain or I increase the patience because now that it's in positive territory, I want to give it a bit more chance, not only to be a nice win, let's say a moderate, okay win, but I want to give it a bit of opportunity to get into higher R2R multiples and make it a bit more attractive for me. Maybe this is the one that really can go for a big win. If I don't give it that chance, I'm never going to get that 4-to-1 trade, 3-to-1 trade. I'll be only hitting 1-to-1s. And if we're only hitting 1-to-1s consistently, it's it's a tough battle. Whereas if we get a few 1-to-1s, but occasionally we got a 2-to-1, a 4-to-1, boom, you get that curve going a bit faster. That's why I want to give it a bit of space. And when I give it a bit of space, and eventually I tighten again. And then it's probably close to the end of the trade. Step 4, again tighten. And this is maybe a bit more difficult to explain, but I would say if it's, let me show you on the chart otherwise. Here, let's say I enter here on step 1. It goes my way, I tighten, it goes against me a bit, but still continues, right? So this is phase 1. This is and 2. Now this is phase 1. This is phase 2. I tighten it. Then I give it a bit more space again. But when it makes a new lower low the second time, right, I start to, or the third time, I start to become increasingly tighter. The more lower lows, the more times it pushes, eventually it's going to retrace, and I start to tighten up again. And I try to ride the momentum as far as it can without giving up too many pips when it retraces. So that sounds great, but how do I do that in real life? And this idea is maybe not for everyone, don't get me wrong, but I do think that all of us are out for small losses and big gains, right? Maybe some traders out there have the other system where they are want a lot of wins but smaller ones and accept a few bigger losses, but you got to have a high win record to be able to do that. And some of you out there might be doing that and focus on that. Well, then this would not be good advice. Or this would not be a good model or example of what I'm doing, right? But I think many out there try to get small losses and big wins. Then this could be maybe something, what I do could be maybe something for you to think about. But this is just the theoretical idea. How do I do that in real life? And this, of course, then what I'm going to show you now in real life is just something I use, but might not be suitable. This, might not be suitable for you because you trade differently. The way I implement this might be not good for others, right? But how do I do this in real life? Let's take a look now. Beverly is saying that the trick tightening when it's going your way for me is knowing when you're giving it enough space to still run to target and when keeping it too close. Yeah, that's a very good question. We'll dive into that, I guess, as we go along. Let's start. I'm going to go through this path. And it's a difficult one, I definitely agree. And interesting as well. Let's take a look at I don't know. I would like to take a look at let's see if we can find a Euro odd 5-minute example from recent past. Let's take a look at the breakout. Now this 5 to 6 minute candle rule, I think, may be more valid for breakouts, by the way, than bounces. With bounce trades, I think a bit more patience probably required, by the way, depending on where you exactly trade it. We'll dive into that difference too. This is an uptrend from here on. This is 6th of January. Alrighty. So we got an uptrend, right? And we got a break. Entry of that fractal break, and the trade is on, right? So what happens? Well, in this case, it's pretty simple. Trade goes our way. Candles are going to the upside, and within a few candles right away, then we get a bit of a stall, right? So the trade is going my way, so I'm definitely already in a more patient mode, but we get a bit of a stall, so that's something, of course, to be worried about. So I start using my time frame method: 1, 2, 3, 4, 5, 6 candles bearish, right? So I'm a bit worried about that already. 6 candles bearish. So I would, in that case, when 5 to 6 candles are not going my way, I would then move the trail stop, right? Tighten the risk. How would I do that? Well, I would use a good candle, a strong candle, a low or high, or a fractal. So I would move it below this fractal and be roughly at break even probably. We do get the balance of continuation, so I give it more space because the trade is anyhow risk-free, right? So I have a bit more opportunity to do that. So step one was give it space, then tighten, which I did, then give it space. We're in break even. We got room to live with, right? So when it moves up like this, we got a couple of options. Either use a very, very tight trail stop. That would be a 5-minute candle low, trading that. In that case, the exit would be here. And we're looking at about a profit, in this example, 55-ish pips, right? That's one way, candle lows. Using fractals, if you want to remain patient, then I would stick to fractals. You got about the same exit, a bit less down in here. If you want to be super patient, you would even zoom higher to the time frame and use higher time frame fractals. Could be an option. I don't do that. Other option, of course, would be to see where the TP could be. Maybe there are pivot points up in here. There's certainly a fib target there, which is the minus 272. So either that could be a TP or the minus 61.8 TP could be a possibility. What I tend to do is aim for a higher TP, because if it does push and push and push, I don't want to cut my winners short. So often enough, I would just aim high. If it gets there, great. I'm very happy. Many, a decent amount of cases, maybe it might not get there. I don't know what the percentage is, but definitely 50-50 is not going to get to the target. Maybe a bit, maybe even more, 60-40, 2 out of 3. Because I'm aiming for a high target. If it does push right, I want to be in there. So could aim for this minus 61.8, for instance. Doesn't get there, then the trail kicks in most of the time. Now, if we left it at break even and remained very super patient, we would have got the continuation, right? But it really depends how much slice and how long you want to stay in that trade. On a 5-minute chart, staying through this kind of consolidation, well, that's already looking at 67 candles, which is about 10 hours of trading. I don't think that's really desirable. So, if you're looking at an entry here and your exit 19 candles, 40 candles from now, it's better, right? Then you're looking at about a trade of 3 to 5 hours. Makes more sense for a 5-minute chart. So let's see if we can find an example of a breakout that doesn't go our way. This breakout of this fractal, right, goes our way again, but we get a bit of a deeper tracement. But because it goes our way that much, I'm not too worried about this retracement, because I know that it's, the likelihood of it just being a pullback is pretty strong. I still use the 5 to 6 candle rule though. 1, 2, 3, 4, 5. 6th candle is bullish. So when the 6th candle appears bullish, I would probably move it to break even or wait for this fractal either 2 and move it below it and then hang in there. Be a bit more patient again. It makes one higher high here, right? When it breaks this top, it makes a higher high. That's great. That's the one thing that I could be kicking in a tighter trail. That means that this low could be the end of that trade, locking in 50. Or if I remain more patient, I would wait for even a lower high to occur, like this. And when it breaks the next top, then move in to be a bit more tighter. Using the fractals, of course, is always an option as well. In that case, the exit would have been around here. Now, is it optimal? Well, maybe not. You could see one more push up, but still, I don't think it's bad. We got, I think, what we were looking for, about 50, 55-ish, 60 pips. For a 5-minute chart, I think it's fine. Well, how about this? Big break. Not sure what happened here. Maybe it was a news event, so bad example perhaps. But anyhow, point is, trade goes our way pretty quickly. I'm trying to look for an example now. Maybe it would be good to show an example if it doesn't go our way. Let's see. Maybe this one here. Let's say impulse correction continuation. This does not really go our way, does it? I mean, there's one candle that pokes, then a doji, and it falls. Not that great, right? So how about this one? Well, I would give it time. I would not be worried about this little correction here. Unless it's 5 to 6 candles. 1, 2, 3, 4, 5. Candle bullish, 6 is bullish. It's already going our way. Can move it to below this fractal. And on top of that, right? Moving below this fractal, locking in. Let's take a look at the risk that is reduced. The risk will be below this bottom. On a 5-minute chart, that will be looking at about 70 pip risk. And if we move below this bottom, 70, 75, it would be about 30. So we're moving to about half the risk already, which is great. Then when we get a strong candle like this, the 5-minute candle like this, very strong, towering above 60, 55 pip candle for a 5-minute chart, tremendous candle. I would use the candle low of that candle actually. So any big candle like that is going my way, either immediately or after the pullback, I would, boom, use as a trail for moving to break even, get the trade out of all risk. That low would be used to be probably at break even or maybe minus 2 pips, which is nothing compared to the 70, 75 risk. And then I would give patience to the trade again. So we got a new high. That could be a reason to lock in. We get a new higher low. That could be another reason to lock in. Depends how much patience you want, how many higher highs and higher lows you think are possible. That really depends. That's something I don't want to give any rule of thumb here because it depends on higher time frame analysis. I do take a look at fibs. I take a look at higher time frames to see what kind of space we might have in front of it. Also depends on how strong the impulse looks like. This is starting to weaken a bit. If I were in this impulse to the upside and these candles keep pushing like this, when something like this arrives, we got two options. Either take the profit right away quickly here, just be happy with that impulse. But most of the time, if you get an impulse like that, there's a pretty good chance you're going to break up this top, to be honest. And you could try to wait for that as well. Whereas if you get a couple of fractals close to each other, well, it's kind of weakening. So might be one of those reasons why to trail it tighter. Let me find one that fails. Let's see. Here, this is not a break I would take personally, but let's say that someone did. Let's say someone took this break. I wouldn't take the break of this fractal because it's in the moving averages, but this one could be okay, or this one, right? Let's take a look at that. It's against the trend, so I wouldn't take the break, but let's say someone did. So we got the break here. Couple of candles, not really going our way. But we do get a lower low here. And we get upside, downside. And then again, 1, 2, 3, 4, 5, 6 candles, not going our way. Our stop loss gets challenged, as you can see, but doesn't get broken because it should be above this top. So we come very close to losing it, but then still moves down. After 6 candles, not breaking this low, I was patient. I gave it space, but it's time to exit. The trade after those candles is still not a positive territory, and it actually showed a large retracement against me. I would, at the minimum, use that candle high of this candle to reduce it to half the risk. But I would strongly think if I was hopefully wise enough, I would exit personally. So either just market exit to break even because it's counter trend anyhow, or at least move it above this top. If I would move it to above this top and then see another 3 candles and the third is a doji, maybe another decision could have been made to take it off. If not, then it's a half a loss. Counter trend break here. Boom, trade goes our way. What an impulse, right? What happens at that point? What do we do then? If it's going our way that much, because then also traders might get, antsy about it. Wow, it's really going my way so much. What to do? You got a couple of things you can do. If you're nervous about the trade and it really goes your way a lot, you can just trail stop the highs. You might get an exit a bit earlier than optimal, but and I'm talking about highs, not necessarily all highs, dominating candle highs, like this one, this one, this one. This one doesn't count. It's a bullish candle. This one doesn't count. It's an inside candle. This one is still the dominating candle right here. But this one is already, again, a dominating candle, so we can move down there. All right, even this one, I don't know about that one, but this one, yes, it's posts a new lower low, so I would be okay with that. Another candle. Good, we can trail stop it. So you get about an exit here, right? That's one way of doing it. Very tight, because the momentum is boom, boom, going our way. Other option, and that could be sometimes optimal, depending on situations, but it just gives you a good profit right away. No stress in living through a pullback. If you trail stop the fractals, you'll probably exit the same spot, but only a bit later. Here, right, using this fractal. And if for somehow you really were very patient, I would say, and left it at break even or a small profit, and you were willing to wait for a lower low, then you can trail the next break. If you wait for that break, then you can start trading the 5-minute highs as well, for instance, or any candle highs would exit here, or the fractals would exit here. But then you really, in those cases, I would have to have trust, pretty high trust, or I would have to analyze that there's a high probability that price will continue. In my opinion, that's a pretty high border. That I really have to see that, have a good confidence that that's going to happen. If I have a reasonable doubt, I would just take that profit from that impulse. But there are definitely cases where I have, my analysis shows that there's a good chance of continuation, and I would still risk that profit, although it's a big one, for a bit more. All right, let me see. All right, the pound yen got up to the 78.6 fib. As I said, I'm expecting that hook back. Anyhow, let's see. It could break to the upside. Who knows? It's kind of a mixture everywhere here. Let me get rid of this fib and this moving average. And are there any questions, by the way, about the things I'm talking about here? And this is good for breakout trades on any time frames, I think. I'm looking at 5-minute charts, but breakouts on any time frames. Bounce trades is a bit different. I'll talk about that in a second. Let me just find one more example here. All right. Break, right? Trade goes a bit our way. Maybe not. I'm looking for example. It's not the best one either. I'm looking for a trade with a break has a bit more hesitation. Here. That's good. Good, finally. So we get the break here, right? And then we got a lot of hesitation here. And actually, I think that was a trade I took. But 1, 2, 3, 4, 5, 6 candles. So that could be a reason to exit. Now, I'll be honest with you, I didn't. And that has to do with the fact that I still thought it was going to, when I analyzed it, I think it was still too bearish for me to exit. Looked like an ascending wedge. Other factors I probably thought about that I forgot in the meantime. And I hanged in that trade, and still we got the follow through. But So I had even more patience than my own kind of rules allowed to me, if you see what I mean. But this is finally I found an example where price is really stalling here enough where the original trade of about, I don't know, 30 risk might be worth cutting short the loss here, right? 1, 2, 3, 4, 5, 6 candles here. It's bullish as well for maybe minus 11. That could be psychologically difficult sometimes, but still minus 11. It's about 35% of the original risk, I guess. 37 maybe. Small loss, relatively small at least, right? If you have your risk management in play. Again, we get a break, but still doesn't go our way, right? 1, 2, 3, 4, fifth candle. Ay, ay, ay. Someone might be nervous about that. Click that trade out and see it go our way. But if you use my time rule, then you know 5 to 6, and the 5 and 6 are bearish, breaking this low, and we can use these fractals to trail it. We're only risking, in that case, about those 10, 11, 10, 12 pips by using these fractals, and it's going our way. So this break was not that difficult. In fact, it was maybe difficult for some, but should have been okay when using my time factor rules. This one could have meant an exit, but could have been also re-entered upon this break, by the way. That sometimes also can happen, of course. Exit, but a re-entry is still possible. It's not revenge trading, in my opinion, because it's just following breakout rules and trade management rules. Obviously, within risk management parameters. Let's see. So, bounce trades. Bit different, perhaps. I don't trade bounce trades on 5-minute charts, although I use them sometimes for 5-minute charts, or 15, but they're bounces on higher time frames. And that's why I'm looking at this 1-hour chart. All right, let's say, and this is really just an example. I just need to find an entry. I'm just making it up. I didn't enter this at all, but I just want to give an example here. So this was entered, break below the 21 EMA, and 1, 2, 3, 4, 5, 6 candles, basically really not going our way, right? But we do see lower low. We see a lower low here at this candle. Let me zoom in a bit. There is a lower low here. So I would do it the opposite. Instead of counting, when I'm looking for a break, let's say I break to the upside, and there are a few candles not breaking to the upside, I count how many don't break. Here, I want a continuation. It's the same thing, but just to the opposite direction, I guess. And as long as I get a lower low here, I still have time for it to continue. And then 1, 2, 3, 4, 5, 6 don't continue here. And I would think about trailing it or etc. So to bounce here, you could look at the candles not breaking this high. That's one thing. And the candles continuously breaking into our direction. It would still be the same thing, but you could look at it from both sides. Now, yesterday, pounds CAD, I was not in a situation to do anything about it because, well, I did this. So those things happened, and I had to take a full loss. Well, in fact, I took a full loss, but one could wonder if I should have and not maybe closed it. No, there was nothing I could do. I had the stop loss here. No, there was nothing to do about that one. And that sometimes happens. All right. Let's see. Yeah, I can imagine, Beverly. I had a feeling already that you were in the same kind of wavelength in a way, if I could use that, or same kind of ideas about this. So it doesn't surprise me that what you're saying. And I'll be interested actually in seeing what you do. I mean, I gladly take a look, and maybe I see something that you do differently or better, or I would be interested in hearing from you either via chat or email if you have time when you decide to tighten it. It's always interesting to compare. Let's see. And then Beverly writes, I've never used candle counts on 5 minute chart, usually on 1 hour, 4 hour, or 15. Yeah, I think that, well, with the pound yen, obviously I still stayed in, but I think if I'm trying to catch the impulse, the whole reason of trading 5 minute is just to catch the impulse. I think there's no other reason. On higher time frames, one could try to stay in, let's say, an extended move like this and see it as a swing trade. One, I guess, could do the same on the 5, but for me, the 5 is just trying to catch this momentum. Trying to catch this momentum. And these momentums occur various times of the day. They will typically occur once a day on one pair probably. And it's kind of like the move of the day out for that pair. So my goal is to catch that. And I want to have basically patience at the beginning and then tighten, patience, tighten with that. Because what's the optimal exit here in retrospect? We can say, well, probably here. That's probably the optimal exit. Why do I say that? Why not this? Because we can never guess the top, right? We have no idea that it stops here. Who would know? I think this is optimal exit here in retrospect. 1, 2, 3, 4, 5, 6 candle not breaking. But that's not an optimal exit because it's at a low. So sometimes actually another trick could be to say, okay, that's the 6th candle, and I'll exit it after the downside, the retracement gets retraced, which is actually around one of these fibs. Forgot to mention that. That could sometimes be a little trick as well. And if you manage to survive this bit of a sideways zone. Let's say the stop loss is, let's say we were trail stopping these lows and give it a bit of space here. This is the dominant candle, this is the dominant candle, and then we trail stop this fractal. Just for argument's sakes, let's say we really made it optimal by trail stopping these fractals. We're in this trade, and the trail stop is around 65, 63-ish here. We see 6 candles not breaking. At this point, we see 6th candle not breaking it. Does it make sense to close? Well, the trade is 16 pips away, the stop loss. The stop loss is already locking in, 40 pips. If it retraced so much already compared to the high was 33 pips. So we gave already 33 pips away. I don't think those 16 matter that much. It wouldn't make sense to close it right at that candle. In that case, it makes sense to wait for that retracement to get that extra push still. And then market exit here or with the TP at this level. Whereas if the 6th candle is at a different spot, let's say pushes down but then up again, then it does probably make sense to make the market exit there. Yeah, sure, Beverly. I definitely would gladly take a look and look forward to that email. Let's see. Uh, not that many trades yet. No problem. Even from December, we can take a look. No, if you have a specific thing you want to take a look at, we can do that. So yeah, that's it, I guess, for today's webinar. Thanks for joining. We got some more webinars tonight on price action trading school, and then it's going to take a look at divergence. Tomorrow, where we got applying profit stops and trade management. So we'll talk about Nenet's view on trade management and my view, which partly, of course, already did today on a live market, but dive into more theory and practice tomorrow. So I hope to see you in those webinars and wish you good trading and see you soon. Cheers.